Vietnam has just successfully organized the 80th anniversary of National Day with a grand parade and an inspiring message from the General Secretary. The vision of a powerful, prosperous, and happy Vietnam is not only an aspiration, but also a pledge for the future. The latest macro numbers from August show that this progress is already underway. Retail sales rose 9.4% year-on-year in the first 8 months. Nearly 14 million international visitors, plus 21.7% supported accommodation, dining, and travel services, while anniversary-related events lifted spending in major cities. Inflation held at 3.2% year-on-year. Construction materials, rentals, electricity, and dining out costs edged higher, partly offset by cheaper fuel and promotions on new vehicles, keeping overall price pressures contained. FDI disbursements reached $15.4 billion in the first 8 months, the highest for this stage in 5 years, with over 80% into manufacturing. Vietnam adopted the global minimum tax of 15%, though an investment support fund to reimburse qualifying FDI firms was established, and further measures are expected. On the diplomatic front, ties with South Korea were deepened through a bilateral summit, while relations with Egypt were elevated to a comprehensive partnership. August was the first month U.S. tariffs of 20% on Vietnamese goods took effect. The S&P Global Manufacturing PMI eased to 50.4 from 52.4 in July, but stayed in expansion, in line with ASEAN peers. This shows regional manufacturing remains resilient despite external pressures. Still, weaker new orders slowed export growth, while imports held steady, boosted by a surge in agricultural products likely linked to the recent U.S.-Vietnam trade agreement. Infrastructure remained a highlight, with 89 projects inaugurated, including the National Exhibition Center in Hanoi and the Nghe An Oncology Hospital. Public debt stands at roughly 34% of GDP, well below regional averages, leaving room to sustain the investment cycle. The VN Index rose 11.5% in August. Momentum built early in the month after the State Bank of Vietnam raised the 2025 credit growth quota for banks, while expectations of an emerging market upgrade further fueled optimism. Average daily trading value hit a record $2.1 billion. However, foreign investors continued to take profits, with net sales of $1.6 billion in August and $3 billion year to date. Financials led the rally, rising by 18.6%. Banks gained on the back of robust credit growth, solid earnings, and improved asset quality. Securities companies also rallied strongly, supported by optimism over an emerging market upgrade and IPO plans from major players. Vingroup-related stocks extended their rise, lifting the real estate sector by 15.4%. Most other sectors posted modest gains of 2 to 3%. Year to date, the VN Index is up nearly 30%, mainly powered by Vingroup and financials. Our portfolio advanced 6.2% in August, compared with an 11.5% gain for the FTSE Vietnam Index. The gap reflects our limited exposure to Vingroup-related stocks, which we remain cautious on given their rally appears disconnected from fundamentals. During the month, we raised cash levels as several positions rallied beyond our valuation targets. The VN Index is now trading at 2025 FPE of 13.4 times. Moderate versus regional peers. Yet this year's gains have been concentrated in banks and Vingroup. Other sectors, including consumer staples, materials, and healthcare, have been overlooked despite delivering solid H1 results that on aggregate outpaced the index's main drivers. This creates opportunities for investors to rotate into fundamentally strong names that have yet to re-rate. With a potential FTSE emerging market upgrade on the horizon and a softer USD providing support, the outlook remains strong, with 2025 forecasted EPS growth for the top 100 stocks at 12.8%.